Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, February 15th, 2011. Well, it's been a choppy day. Looks like options expiration activity is finally getting started. Yesterday, we saw the lightest trading day in the last 52 weeks, essentially. Today, we're seeing a little bit heavier volume and much better whipsaw action intraday. You can see initially the markets gapped lower, then pushed up, then reversed, made a new low, then reversed back up, came back to that same level of support, and then have since then moved up and are having a small pullback at this time. So again, the whippiness continues intraday, which is great. The volume, though, has declined as the course of the day has continued. Take a look down here. You can clearly see that the volume in the first hour of trading was pretty solid. Then after that, it's really gotten smaller and smaller. That makes the bias for the markets, whenever you have this type of light volume, always generally, especially midday around lunchtime, go into that neutral to upside bias. And you can see ever since that 10:30, 11 o'clock time frame, the markets have generally floated sideways to up until this most recent pullback. Now, there are some stocks in motion today which I want to cover, but before we do that, we just want to take a look at the key resistance levels. What are the support levels on this market? What are the resistance points? How to know where to play them? Well, let's take a look right now. Notice that the first level of support was the pivot double bottom from yesterday. That's so important. First of all, I said that in the chat room today, and again, you can take a free trial of that intraday stock chat on our website, inthemoneystocks.com. But just take a look. The market opens here, sells off, goes right into that support level. That's your first buying opportunity of the day. Double bottom is always a good buying opportunity, assuming it's the first hit of that level. The market bounces dramatically higher. Where does it go? It goes into the 50 moving average. Doesn't it make sense that the first hit of that 50 of the day would probably be decent resistance? Sure enough, it is. The markets then go into a 3-bar sell side surge. As we come back to double bottom, you should know by now, if you've been following the In the Money Stocks methodology, you never buy the second hit of a double bottom. The first one right here was perfect because it was the first hit. This is now the second hit. Stay away. It's most likely going to go lower. Sure enough, the market does go lower, traces down to this blue trend line. Now, why is this support? I mean, where does that line come from? Zoom out on the charts and you will see. Take a look, guys. Pivot high from the 8th, pivot high double top from the 9th. After we broke through it here, it now becomes support. So remember, a broken resistance becomes support, a broken support becomes resistance. Always remember that. Very, very important. Let's zoom back in. So you come down to the blue line. That's your level of support. The market does find support there. It rebounds back up, goes back to this level right here, which now, again, broken support. When you go back up, becomes resistance. What happens right there at that white trend line? It pulls back. See the red candle right off of that level? Then it starts to move back up. Now, let me ask you, this is the second hit as it moves back up. Would you do anything like short it there on the second push back up here on the green candle? The answer is obviously no, because it's the second hit. First hits only, guys. If you don't know that, join the Research Center right now and start learning the keys to a profitable trader, profitable investor, and swing trader. All right? So again, up you go. Market surging higher and higher. We come right into the first hit of the 20 moving average now. All right, 20 moving average, right? Now, earlier today, we got close to the 20. We hit the 50, but you never hit the yellow line, which is the 20. See it sloping down here? This is the first hit of the 20. It's going to be resistance. Market pulls back off of it. Now, where does it go? What did we just say? If you break resistance, which is this line now, remember the second hit was of this resistance line. White line is now resistance, but you break it as you come back in. Broken resistance now becomes support. That is now support right here. Sure enough, market finds support, bounces up, goes back to the 50 moving average. Now you might say, well, but this isn't the second hit of the 50, so why would we short it there? It's not that simple, guys. What else is this point up here? It's also a perfect double top. Double top from here right to here. That's an intraday double top and going to work as resistance. So not only is the 50 moving average there, and again, you would discount the 50, absolutely, because it's the second hit. You hit it once over here. But you know what? You still have a double top that's been formed now. That's going to be resistance, and the markets are selling off. Now, as they come down here, the 20 is going to act as support, right? Because you broke through the 20, which was resistance. Now, when you come back here, you should find a little bit of support. If it gets through that eventually, then you're going to look for this area as being your next support, and then double bottom as your last support on the intraday chart. If you get through there, then the 200 moving average would obviously be your next level. On the upside, double top will no longer work because that's resistance. That's a resistance that's been hit once already right here. So the next time up, you would look for it to go through. And at this point, what you'd actually do is probably erase this level and look for a gap fill right up here. That'll be your ending. This will be your ending zone later today in case they rally this market back up. That'll be the point of interest to go towards and watch. All right, so these are all just little keys that you have to put in your arsenal. All right, if you put these in your arsenal, you become a better trader, you become a profitable trader or a more profitable trader, or you negate the losses that normally many of you will take. And again, folks, free trial here. This is a pure offer. Go to the money stocks. Click on the Research Center free trial. There's just a free trial 7-day banner. You click on that. You can go sign up for your account. You can choose what free trial you want at that point once you sign up and create your account. Very, very simple. And again, 7-day free trial for anyone who has not been a member before who wants to test this out. All right, so that's what the market is. Now, interesting, as you come down just on top of this 50, you can see the market's getting a small bounce. Volume continues to be minuscule, which again bodes positively. It's hard for me to imagine the market selling off to the lows of the day, considering the volume is getting lighter and lighter throughout the day. Spiders right now are just down 36 cents. Dow's down about 40 points. NASDAQ is down 7, and the S&P is down about 4. Now, the key mover today, one stock I want to touch base on, Exxon Mobil. This is an amazing stock chart. Why? Because yesterday this thing soared to the point where it was almost hard to imagine because of this chart right here. It opened lower yesterday and just had non-stop green candles almost all day long straight up. Very rare you see that, especially on a stock that's the biggest market cap company in the world. All right, biggest by far. Apple's around the second or so, but still lagging Exxon Mobil. So that, again, an unbelievable move, really harkens back to the idea that we've been talking about is this is one of the major Dow components. If you're going to try to prop the market up, you're going to do that to Exxon Mobil. Now, today it's the opposite. In fact, you have a little bit of a reversal today, especially if this closes below this 200 today. This would be a very key reversal on the daily chart. Very, very key reversal on the daily chart. Must be watched very closely. So keep an eye on Exxon, guys. Unbelievable chart here. Yesterday, it takes all day to go up. Literally within the first hour of trading, it negates the entire move up, collapses down 200 moving average. We scalped this in the intraday stock chat 3 times. Once here, another time down in this range, and another time right here on a pierce of the 200. Each of them was a profitable scalp. And again, this one being your last one, look at how profitable that was. Look at the size of the bounce there all the way back up. You got to know your levels. You have to know your levels, folks. That's what it's all about. So good scalping opportunities on the intraday of Exxon here today. 3 of them for profits today in the intraday stock chat. And again, there are plenty of other scalps as well. It's just a matter of being in there and taking advantage and profiting. All right? That's what it's all about. Now, interesting to see you have Exxon starting to uptick here a little bit. Will Exxon get a buy program at the end of the day and lift it back up? It's always a possibility when the Fed is involved here. We know the Fed is continuing to use POMO day in, day out. Remember, POMO is QE2. $600 billion divided into individual days is called POMO. That is, again, permanent open market operations. They're using that money to flood the banks with money, which in turn is being put into the market at possibly a 9 times range. So if there's 6 to 8 billion of POMO today, for instance, literally 9 times of that can be utilized by the banks if they want to. It's amazing the amount of money that's flowing into these banks, folks, and being put into the market. Now, again, it's interesting to also watch whether or not you're starting to see kind of that distribution effect in the market. If we go back to the market, I want to just touch base on this. Yesterday, the markets, again, continued to chop sideways. We're seeing more and more small money coming into the market, guys, and that's actually a bearish. And by the way, great pop on the spiders here. And again, that's like volume for you, and also the 20 moving average support acting very nicely there. But nonetheless, very, very important to understand what is going on here in the overall markets. The markets, again, kind of creeping higher, but not really going higher. And that generally tells us that, especially when January was the biggest money inflow in 7 years of small money, meaning, again, retail investors. Retail investors are like the mom and pops out there. And again, a lot of you guys may be in that crowd. Hopefully not, because generally they're the ones that are always wrong. But you have to understand, when that money comes in and the markets aren't going up more, it's telling you generally that a lot of these institutions are starting to scale back on their positions. Now, again, it doesn't mean the top's in by any stretch. You have to, as long as volume remains this light, assume the Fed is going to do their job and continue to prop things up. But what it does tell you is to be a little bit more wary, in a sense, of what's going on. Understand the rules here. Understand small money is coming in at its biggest clip since 2004. That's bad. In terms of what I want to see, if this market's going to go higher, that's not good. All right, understand that, folks. It's a big little point there that I have to make sure you all are getting here. And again, we'll discuss this more in the nightly video in the Research Center. But in any case, something to keep in mind. Some other stocks getting hit pretty sharply today. Take a look at potash. Potash getting decimated today, down $7 or so. Finally getting a little bit of a bottoming tail. And by the way, folks, did you need a better signal to buy and go long potash today than this bottoming tail right here? And look at the pop that it's getting. Look for those bottoming tails, guys. They're there for a reason. You can profit off that stuff. I mean, you have a chart that's oversold intraday and you get a bottoming tail, look at the reversal come in. Clear as a bell. Monsanto's also getting hit today, down almost $3. That actually could be getting a bounce shortly as we're seeing the bounce in potash, so this could follow suit. And then Mosaic is also getting a bounce already off a little bit of a bottoming tail right there as well. One stock I'm noticing is upticking a little. DPTR, one of my favorite small oil plays. Kind of everyone's, kind of left off the chart trade here on the DPTR. It's Delta P. It's a little oil stock hovering at the lows. I love the base it's made here. It keeps on trying to uptick. 2 days ago on Friday it went up, then it came back in yesterday. Now it's starting to make a climb again, and again looks very, very good to me on the longer term for a pop up to this level at around 82 cents, and then to the 200 next would be around the 85-cent range. So watch that one. That's one of my favorite small caps out there. NIV was a favorite of mine a couple weeks ago, guys. Well, again, I gave the alert out. We bought it around the $2.20 marker. It went above $3, a dollar gain pretty much to 316. Unbelievable move there on the NIV, and that was again alerted to buy at $2.20 approximately. Great move there on that small cap. So the small caps are showing some signs of life. There's some large cap trades based on the volatility because it's Options X. Remember, Options X will continue to be like this. You're going to see the whippiness Tuesday, Wednesday, Thursday. The whippiness happens on Options X because the institutions are trying to flush the market. The retail investor who bought options, they're trying to flush them out of the market. All right, again, think about this. An institution sells an option for a $3 premium. Now that option is now in the money because it's a call because the market's gone up $3. And they're breaking even on that. They're not making any money. What they want to do is push that stock, which has that underlying option on it, back down to the break-even point of being up zero from where that was bought from the strike price. It then expires worthless. They make the full $3 in premium. And again, when you sell billions of dollars in options, that's a lot of profit that you want to capture. Understand that, guys, all right? They have a concerted effort that they want to make sure those options expire worthless or as best as they can to maximize profit. That's why, again, as I always say, never hold options into Options X. It's just a scam. And again, very, very kind of weak money does that. In all fairness, if you hold it into the Options X, it's usually weak money that's doing it, the small investor. All right, guys, I hope you guys learned something in this video. Come join the free trial at inthemoneystocks.com. You can take it for the Research Center, which includes everything listed under the Research Center at inthemoneystocks.com, or you can join the Intraday Stock Chat free trial, both a full week-long 7 days. Take care, have a great afternoon, great evening, and I'll see you later.